To invest like Warren Buffett, look for a margin of safety. Focus on quality and don't follow the crowd. Buffett's goal is always to pay less than a company's intrinsic value. He buys stocks because he wants to own those businesses for the long term. The stock portfolio of Berkshire Hathaway is worth hundreds of billions of dollars. And most of the stocks were selected by Buffett himself. Berkshire owns 5.5% of Apple stock, which was worth more than $150 billion as of late 2021. Bank of America, NYSE Berkshire owns 12.6%. Before starting the video about how to invest like Warren Buffett, I hope you have subscribed to our channel and liked our video. Being a huge fan of Warren Buffett, I've followed his investment strategy for long and it has worked well. In this video, I'm going to break down what that strategy is and how you can use it to make money in the stock market. If you want to invest like Warren Buffett, you don't need to do anything extraordinary. In fact, many new investors are surprised at just how uncomplicated the Oracle of Omaha's investment style is. Buffett invests in great businesses trading for less than their intrinsic values. And then he holds on to these investments for as long as they remain great businesses. Obviously, there's more to the story than that. We'll dig a little deeper into Buffett's investment style. So let's get into the topic. Make sure you hit the bell icon. Warren Buffett's investing philosophy in 8 steps. These are some of the most important Buffett investing principles that you can incorporate into your own investing strategies. 1. Look for a margin of safety. Prioritizing a margin of safety is a cornerstone of Buffett's investment philosophy. In simple terms, a margin of safety refers to characteristics of an investment that help to protect investors from losing money. The intrinsic value of the assets should prevent the company's stock price from declining too significantly. Buffett's goal is always to pay less than a company's intrinsic value. 2. Focus on quality. Warren Buffett doesn't invest blindly. We won't see him buying struggling businesses, regardless of how cheap they become. 3. Don't follow the crowd. Don't buy certain stocks just because everyone else is. The best way to invest is to ignore the crowd entirely and focus on finding value on your own. 4. Don't fear market crashes and corrections. The obvious goal of stock investing is to buy low and sell high. But human nature can compel us to do the exact opposite. Buffett loves it when stock prices drop since it creates opportunities to buy at a discount. 5. Approach your investments with a long-term mindset. Warren Buffett quotes on investing you can absorb is: if you aren't willing to own a stock for 10 years, don't even think about owning it for 10 minutes. He doesn't choose stocks as their prices are about to rise. It's just he wants to own those businesses for the long term. 6. Don't be afraid to sell if the scenario changes. Taking risky measures is the key. While he certainly wants to own every stock he buys forever, the reality is that outlooks change. 7. Learn the basics of value investing. Value investors seek out and invest in companies with intrinsic values. Value investors like Buffett expect that the market will eventually recognize the full value of a currently undervalued company, resulting in an increase in the company's stock price and a profit for the value investor. 8. Research and reflect. Buffett regularly spends long days in his office in Omaha, Nebraska. But it often surprises investors to learn that he spends the majority of his time just sitting alone and reading or not doing anything at all. He believes that much of his success can be attributed to the accumulation of as much investment knowledge as possible. Now, which stocks are recently bought and sold by Warren Buffett? The Oracle of Omaha was making moves in the second quarter. Bought ones are Occidental Petroleum Corp., Ally Financial, Apple, Activision Blizzard Incorporated, Chevron Corp. Recently sold ones are General Motors Co., U.S. Bancorp. So, which stocks does Warren Buffett avoid? According to Investopedia, buying at the wrong price. confusing revenue growth with a successful business, and investing in a company without a sustainable advantage are all mistakes the Buffett has shared with his shareholders. In his legendary annual letters to them, Buffett avoids investments he doesn't understand well. That's the main reason you won't find many high-growth technology companies or biotech stocks in Berkshire Hathaway's portfolio. One final takeaway is that just because Buffett avoids a certain sector or industry doesn't mean that you also have to. Keep watching our channel until then, goodbye.